So let's take a look at the brief history, right? Timecom used to be controlled by UEM, but in 1991, it had debt problems. So then the Malaysian government decided to take over it. Now, what's interesting about this leading up to 2008 is that Time had one CEO every year. So it was changing its CEO every year pretty much, right? 13 CEOs in 13 years. And that is until the current CEO, Afzal, took over. Okay, the first and obvious one is that it is the cheapest option out there, quite frankly. If you compare it to its closest competitors, you look here, Timecom, and here, TM, there's really no comparison, right? Any rational human being who wants cheaper and faster internet will know which option to go for. Hey guys, welcome back to the channel, best place for long-term stock investors. Today we talk about Timecom. Basically, as always, we'll start with the history and the management. Then we take a look at the financials, and if you stay until the end, we will share with you, or I will share with you, the risks and rewards or potential rewards that the company can have if you choose to invest in it. So why am I actually covering or talking about Time.com today? Now, to me, it's actually one of the great success stories of Malaysian businesses. And no surprise that since the March of 2009, the stock has gone up by 13 times or about 13 times. And so the question on everyone's mind, of course, is, can it go up some more? Is it worth getting into right now? And I'm going to spend this episode or this video explaining to you my thoughts on what's good, what's bad, and beyond. Before we begin, if you're interested in building a 6 to 7 figure portfolio, then you need to check out our free training, which you can find in the description or the comment section. Okay, so what do they do? Well, quite simply, they're an internet service provider. That's pretty much it. But basically, if you're a Malaysian or you're staying in Malaysia, if you want to get internet, there's really only 3 options. The first is TM or Telecom Malaysia. The second is Maxis. And then the third option is time.com. So let's take a look at the brief history, right? Time.com used to be controlled by UEM, but in 1991, it had debt problems. So then the Malaysian government decided to take over it. So in 2001, they actually got listed after being controlled by the government. And the largest shareholder, no surprise, is a government entity called Khazanah. Now, in 2002, Maxis actually bought Timecell, which was Time.com's cellular business. And as a result, 2003, the government actually awarded 3G licenses to TM and Maxis, but not Time. Now, because they didn't have the 3G license, Timecom actually focused more on providing internet services as well as their fixed line business. So in 2006, Time actually won their 3G license, and what they did with it is that they allowed DG to use the 3G license, but in exchange, they had 10% of DG shares. Now, what's interesting about this leading up to 2008 is that Time had one CEO every year. So it was changing its CEO every year pretty much, right? 13 CEOs in 13 years. And that is until the current CEO, Afzal, took over. Now, here's the thing, right? So they've had 13 CEOs over 13 years leading up to 2008. But since 2008, October 2008, Afzal is still the CEO today. And so basically why that has been the case is because he has turned Timecom around. But before I share with you what happened, let me talk a little bit about Afzal's background. Now, so Afzal has a degree in mechanical engineering with electronics from the University of Sussex, UK. So he started his career at Group Lotus PLC, which is in the automotive industry. He's also the founder of the Malaysian Internet Exchange, or MyIX, in 2006. Fun fact, he sits on the board of CIMB Group Holdings Berhad. Now, let me paint a picture of what was happening before Afzal joined, right? So in 2001, Timecom had a revenue of 957 million ringgit. But by 2008, that number dropped all the way to 287 million ringgit, nearly an 80% drop. Now, why? Most of it is because of their fixed line and payphone and mobile businesses declining. Basically, it wasn't profitable anymore to do these businesses. Now, so as mentioned earlier, 13 CEOs in 13 years, right? So this is what Afzal did, and it's a very basic but effective strategy. Afzal's turnaround strategy was very simple. He needed to focus on the future, and the future was fiber. So when he joined in October 2008, he quickly got to work. In 2009, Tenaga Nasional Berhad allowed Time to use their fiber optic network, which is a big deal, right? 2009, same year, he also started to sell DG shares that he previously owned in 2000, that Timecom previously owned in 2006, reduce that stake so that they can raise money, about $1 billion, in order to manage some of their debts. So you can see he's not just looking at what's happening outside of the company, which is where the big trends are, but also what are some of the risks within the company. And in this case, it was the debt. Then in 2010, less than 2 years of him joining, Timecom is off the ground running when it comes to the fiber internet high-speed business. So because of his strategy and his management, if you recall, 2008, the revenue was 287 million. Then as of 2020 or today, it is now 1.2 billion ringgit when it comes to revenue. That is just amazing to me. If you're enjoying the video so far, remember to give it a like, subscribe, and of course, click on the notification bell so that you know when new videos are out for you. Now, financials, very important, right? 2016 revenue was 767 million. And as I mentioned earlier on, 2020, the revenue was 1.2 billion ringgit. Now, this amounts to about 10 to 12% increase every year. Awesome. Q4 2020, their revenue was 314.9 million ringgit, which is about 1.7% higher than the corresponding quarter. Why? Because mostly 1.5% increase of their data revenue business. And when it comes to their recurring revenue business, which is the internet services, that was mainly contributed by retail customers. So, profit before tax, 2016, that number was 368 million, and 2020, that number became 423 million, a small increase. Now, for the quarter 4 2020, this number was 109.3 million, which is about 19 million or 2.1% higher than Q3 2020. Why is that the case? Well, there was a little bit of revenue growth and also a lower net loss on foreign exchange, as well as the provision for doubtful debts was slightly lower. Now, what about the balance sheet? Quarter 4 2020, that number was a net cash of 673 million, which is higher than the 2016 number of 340 billion. It has doubled in 5 years, which is a good sign. Now, operating cash flow, 2016, the number was 471 million. And then in 2020, that number had a decent increase to 683 million ringgit. So it's a good sign that they are very cash flow generative. Now, the 2020 number is an increase from 2019, which is about 610 million ringgit. Most of this is simply because the business improved. Now, I'm going to talk a little bit about what I think is good about the company and also, of course, what is the risk. Okay, the first and obvious one is that it is the cheapest option out there, quite frankly. If you compare it to its closest competitors, you look here, Timecom, and here, TM, there's really no comparison, right? Any rational human being who wants cheaper and faster internet will know which option to go for. So then you might be wondering, why is Timecom so much cheaper? Now, actually, I have a very long answer for this. I don't want this video to be half an hour long, so I'll shorten it for you. Basically, in order for you to get internet, the company will have to do what is pulling a wire, essentially, or cable all the way to your area that you're living in, right? So now Timecom is really smart in that they only bring their cables to highly and densely populated areas. So the cost is the same, right? For let's say someone like TM or Time to pull a cable, basically. But if you bring your cable to, let's say, a highly dense area, then your ROI or how fast you can get back your money is going to be a lot faster, right? Because there's just more people buying your internet, right? That's why Timecom only handles or services, people in either high-rise condominiums or just condominiums, and or office buildings where there are a lot of people, where a lot of people can use. So because of that model, they can actually charge a lot less. Whereas if you compare it with Telecom Malaysia, needs to do what I call national service, which is that they need to bring the internet to areas that are not highly populated, like maybe a village or even a very small town. So all of this makes it a lot more unprofitable to run the business. Whereas timecom is really focused, is highly densely populated, and that's where they will stay. So my second point is linked to the first one that I was talking about, and that is that urbanization in Malaysia is increasing. So just by this trend alone, what that means is that, because guess what, guys, land is pretty much fixed, right? The land that we have today in Malaysia is the same 1,000, 2,000, 3,000 years ago. But if there's more people, what's going to happen, right? Real estate prices is going to go up. So what happens when that happens? Well, people will be more willing to opt for smaller spaces. And what does that mean? Well, people are going to prefer condos more than landed properties, as landed properties are, start to become more unaffordable, and condos will replace them. Not entirely, but certainly at a bigger chunk. So what happens? What does that mean? Well, that means that now more people can actually use time, a cheaper and faster option than if they were just in a landed property. Good thing number 3, high barriers to entry. This is a simple point. It's actually not like a restaurant, right? Where pretty much anyone can start a restaurant. You just need to know how to cook and find a space. Starting an internet service company is not very easy, right? You need a lot of money, you need to know the right people, get the licenses and all that. So yeah, that's one thing that's going for timecom essentially. There are only 2 or 3 players in the space, and that's unlikely to change. Number 4, solid financials, right? As I mentioned earlier on, fantastic cash flow, fantastic revenue growth, and of course, very safe in terms of the balance sheet. Net cash, very healthy, 673 million. And of course, if you look at timecom's margin here and TM's net margin here, you can see there's a huge difference between both of them. And I already explained it earlier. Why is it that they are a lot more profitable? And the last good point, well, they have an awesome CEO. What more can I say? And no, I'm not being paid to say this, although I wish I was. Okay, now the risk. Of course, if the CEO leaves, this might pose a risk. He has been one of the best CEOs in Malaysia, certainly for the whole of timecom's history. So that's something you need to take note of. Number 2 is that urbanization might slow down, right? Because right now we are still a developing nation. We're still not very densely populated yet, especially when you compare it to some of the major cities in the world like Singapore, Hong Kong, Tokyo, or Shanghai, New York, and all that. So we are still quite away from that, but then eventually we will reach there. And when that happens, then I would expect timecom's growth to slow. And the third one would be simply the fact that they cannot handle landed properties, right? And Malaysians, we love landed properties. And these are some of the more softer, less quantitative side of things that we all need to look at. And that's the truth, right? If people just really like landed properties, right, then they'll say, hey, instead of me accepting urbanization and living amongst many people, densely populated area like in KL or Penang, what I will do is, I will go outside, right? Especially now with MCO, people do not really need to live in the city center because they can work from home. And so they are more willing to go out of the city center to stay in usually landed properties. And all of this just means that the opportunity for timecom gets smaller. So this is something you also need to be aware of. All right, guys, hope you enjoyed this video. And if you did, why not come check out some of our other content and video. Of course, remember to give it a like. Follow us on Facebook, Instagram, Telegram, you name it. We're pretty much everywhere. And see you in the next video.